What if one company is powering the future of gaming, AI, and cloud computing, all while delivering stellar financials? That's what AMD is doing in 2025. From their latest earnings to taking some of the market share from Nvidia, here's why AMD is a tech titan you can't ignore. Stick around, this is going to be epic. AMD is a semiconductor powerhouse driving innovation across high-performance computing, gaming, and AI. Their Ryzen CPUs and Radeon GPUs deliver top-notch performance at competitive prices, making them a favorite for gamers and professionals alike. From laptops to data centers, AMD's chips are efficient, squeezing out maximum power while keeping energy use low. A big win for sustainability. Their adaptive computing solutions, like the Instinct accelerators, are fueling AI applications, from self-driving cars to smart factories. With partnerships powering PlayStation, Xbox, and cloud giants like Oracle and Google, AMD's tech is everywhere, positioning them as a leader in the AI and data center boom. Let's dive into AMD's Q1 2025 earnings, which dropped on May 6, 2025. They reported a blockbuster $7.4 billion in revenue, up 36% year over year, beating expectations of $7.12 billion. Their data center segment alone raked in $3.7 billion, surging 57% from last year. Thanks to booming demand for EPYC CPUs and Instinct AI accelerators, net income hit $709 million, with a GAAP EPS of 44 cents, a massive 528% jump from Q1 2024's 7 cents. On a non-GAAP basis, EPS was 96 cents, topping estimates of 94 cents. Looking ahead, AMD projects Q2 2025 revenue at $7.4 billion, with a non-GAAP gross margin of 43%. Despite a $1.5 billion hit from new export controls to China, this resilience shows AMD's ability to navigate challenges while capitalizing on AI and cloud demand. How does AMD stack up against Nvidia, the AI chip king? Let's break it down. For Q1 2025, AMD's EPS was 44 cents GAAP and 96 cents non-GAAP, with a trailing 12-month EPS of $1.38. At a stock price of $143.81 as of June 27, 2025, AMD's PE ratio is 104.97, high but 26% below its 8-year average of 142.09, suggesting it's relatively undervalued compared to its history. Nvidia, on the other hand, reported a Q1 2025 EPS of 76 cents with a trailing 12-month EPS of $3.10. At a stock price of $155.02, Nvidia's PE ratio is 49.37, lower than its 10-year average of 52.15 and notably below AMD's. This indicates Nvidia is trading at a more attractive valuation relative to its earnings, reflecting its dominant AI market position and CUDA ecosystem. However, AMD's forward PE of 35.41 is competitive with Nvidia's 30, hinting at stronger expected earnings growth from AMD. Both companies face risks, like export restrictions to China, with Nvidia potentially facing a $5 to $7 billion quarterly hit compared to AMD's $1.5 billion for 2025. AMD's focus on AI inference and custom chips could give it an edge in specific markets. AMD's not just keeping up, they're innovating. Zen 5 architecture and Instinct MI325X accelerators are pushing AI performance, similar to Nvidia's H100 in benchmarks. Their open source ROCm software and developer resources like their YouTube channel empower coders to unlock AMD's hardware potential. With new EPYC and Ryzen AI Pro processors, AMD is driving enterprise AI PCs and cloud infrastructure. Despite Nvidia's lead, AMD's lower market cap of $215 billion versus Nvidia's $3.5 trillion suggests more room for growth. Some analysts are highlighting AMD's 26.7% EPS growth that's outpacing Nvidia's 14%, and they're eyeing a price target of up to $200.